What's going on, everybody? Liam O'Reilly, Vermont economic realtor with Jerry Riley Real Estate. I hope you're doing well. The August stats are out for Vermont, so we're going to be talking about those stats here in this video, specifically around Chittenden County. Before we get into it, I wanted to tell a story about a client of mine who wanted to submit an offer on a home recently. Now, this home had just hit the market. It's been on the market for under a week, and they wanted to offer somewhere around 20% under list price. Now, I advised them that that was probably too low in order to get a response. I mean, I'm happy to write up any offer that they want, but I'm not sure, if your goal is to get a counter offer, I think that is going to be coming in too low based on the current market conditions. And their response to me was, maybe if this was a year ago or 2 years ago, the seller can list their home, they can get multiple offers, and they'll sell it for well above list price. But the market's changed now. And while that may be true, the market hasn't completely shifted into what it was in the past. And so with this data, I wanted to use this data and take a look at what's going on in the market, use these numbers to decipher what's happening in the Vermont housing market. So let's get right into it here. We're going to switch over to the browser view and take a look at the infographic. So this is public data. You guys can see this through the link that I leave in the description. We can see August 2023. I am specifically looking at Chittenden County here. We can see that closed sales are down 24%, roughly 23.6% year over year. So a lot less transactions are happening. New listings are down about 5% year over year. Active inventory is up slightly, 3.2%. So a little bit more homes than there were year over year than there were last year, but still not too many homes on the market. And the median sales price is essentially flat at 470. So we haven't really seen home prices go up, home prices go down. That's kind of the quick overview that you can see in this data, in this infographic here. But what I really wanted to point out is take a look at the days on market there, 7 days on market. It really shows how fast the market is moving. Of course, it's up 16.7% from last year, which means there's probably 6 days on market last year. Now it's up at 7. So percentage-wise, big increase. But overall, the market is still moving very quickly. There's still, I think because inventory is so low, the homes that are hitting the market and are accurately priced, those new listings are selling quickly, are getting multiple offers, and are selling for above list price. So going back to that story about my client at the beginning of this video, because the market is moving so quickly, you can see there are 7 days on market. When a home just hits the market and it is still in that first week, it's pretty tough to get something for 20% under list price. And I wanted to shift over to this data here. So this is Chittenden County as well. This is median sales price. We're going to come back to it, but the percentage of list price received is what I wanted to take a look at. So once this loads here, so we can take a look. We're still at 104.6% of list price received here in Chittenden County. Now, yes, it's changed drastically from a year over year. When you look at the 2022 data, look at this big spike. We're at 107.6 or 108.5 at its peak in May of 2022. So that was when the peak of the multiple offers were going on. People were getting well above list price. Remember, those are closed sales. So it was probably a couple months before that in March of 2022, which makes sense, right? Rates were still low. We were coming out of the winter season. The spring season was upon us. People were going crazy. That was when we would see 10, 20 offers on homes. Now, we're not quite seeing 10 to 20 offers on homes, but we're still at 104.6% here in August of 2023. Now, if we compare that to where things were before the pandemic, let's look at the same month. So August of 2019 is what we're looking at now. We're at 99.6% before the pandemic. So, right around list price. People were basically getting list price or better. If we take a look at even when things were pretty hot, in August of 2021, 103% of list price. So, although things have changed, and going back to the story that I said at the beginning of my client, although things have changed, we're still seeing homes are selling for a higher percentage over list price than they were back in August of 2021. And anyone who's in the market in August of 2021 will say that wasn't necessarily a cool market, right? That was still very competitive. There was lots of multiple offer situations. People were saying the market is red hot. Now people are getting more money over what they're asking for than that red hot 2021 market. So what we really have to think about, and what you really have to ask yourself as a home buyer in this market, is what type of property am I buying? What are the conditions around this property? And use that to make your decision accordingly. So my buyer is right. My client is right that the market has changed drastically from a year or two ago. But that doesn't mean that within the first 7 days of a home being on the market, that offering 20% under list price is a realistic offer that's going to get accepted. It's just simply not. Now, even if the home is priced too high, even if the home is priced 20% too high, you still aren't going to get an offer 20% under list price in this market. I mean, if you do, hats off to you. I haven't seen it happen. And the reason why is because sellers are looking at this market. They're seeing that 104% over list price, and they're expecting to get multiple offers on their home. They're expecting to list their property. They're expecting it to be hot. They want to have a lot of interest, and they want to sell for over list price. That's what they think is going to happen. But, in reality, if they've overpriced their home, the market has changed. The market is different. Some homes that aren't priced properly are sitting for longer. There's less buyers out there, so there's less multiple offer situations going on. All those factors play into effect. But until that home sits on the market for a week, 2 weeks, a month, 2 months, after it sits on the market and the seller of that home starts to realize, hey, maybe there aren't any buyers out there at this price. Maybe I'm not going to get the multiple offer situation that I was hoping for. And maybe I should start to lower this price. Maybe I should start to consider offers that are well above list price. But until the seller has seen that with their own eyes from the market, it's very, very unlikely that you are going to get an offer accepted for that 20% under list price number that you're hoping for. So really what I'm trying to say is understand what you're buying. Is this a home that just hit the market, or is this something that's been sitting for a little while, that maybe just came back onto the market, that maybe has a couple price drops? What type of property are you buying? And use that to make your decision, as opposed to just saying the market has changed completely, I'm going to offer 20% under, or the market is still hot, I'm going to go bid like crazy. You really have to understand what you're buying. Okay, moving back into the market stats here. So percentage over list price, again, market's still pretty hot. Something I really wanted to talk about here too in this video is the active inventory versus new listings. I think this is really interesting data to look at and think about as far as the Vermont housing market goes, because we have been talking about I've been talking about the lock-in effect on this channel for, I don't know, maybe 6 months now, which if you don't know what the lock-in effect is, that's essentially people have locked in at a 3% mortgage, 4% mortgage, and because of that low mortgage rate, they're not incentivized to sell their home and move up into a more expensive home. Like the move-up buyer is essentially gone. And so that's kind of been the theory that's floating around. That's the theory that I have been saying on this channel, and what I have been talking about as reasonings as to why there isn't much inventory in the Vermont housing market. Now, what we're looking at now is a chart of inventory in Chittenden County. So we can see here we are basically at all-time lows. Yes, it's up 5.9% from the prior period, or from a month ago, and up 3% from a year ago. Yeah, I mean, okay, so it is going up a little bit, but if we look at this chart, we are still historically low. We're at 162 listings. If we look at the peak in 2014, we're at almost 1,200 listings. So we're looking at about 8 times. We could increase our listings. We can multiply our listings by 8, and then we'd be at the peak that we were in 2014. And remember, now this is something that we've talked about a lot on this channel, but I wanted to bring this up. So look at how many homes were on the market, the difference between supply and demand in 2014, and take a look at the median sales price. We're going to go back to this chart here. The chart of median sales price in Chittenden County in 2014, it's not crashing. We're seeing prices basically stabilize, right? On a month-to-month basis, sure, it fluctuates up and down, but we are not seeing home prices in 2014, or we didn't see home prices in 2014 completely crash despite all that inventory. And now if we look at the days on market, or not the days on market, the month's supply, which is essentially just a ratio between home sellers and home buyers. Month supply was wicked high. It was almost at almost at a year's supply. It was at 11 months in 2015. 2014, it was at about 7 months. So it was a lot higher than it is today, right? Right now we're at 1 month. So basically homes are flying off the market. So that is why, when I preach that more inventory, we've seen more inventory in the past, and we've seen less demand than we have in the past. And home prices here in Vermont haven't come down. They haven't, they don't fluctuate like some of these other markets, which is why I've been preaching that I think it's highly unlikely that a massive housing crash is coming to Vermont, is coming to Chittenden County. And this is the data that we're looking at when we're making these predictions. I'm not just coming up with this out of nowhere. I'm looking at, okay, what has happened in the past? If we are to see the same thing in the future, if the same thing were to happen, would that result in prices coming down? And I mean, we have a long way to go if home prices are going to completely crash around here in Chittenden County. So going back to the lock-in effect, sorry, I kind of went off on a little tangent here. What I wanted to talk about are new listings. So this chart that just loaded here is the new listings in the market right now. And if we take a look at it, we're at 199 listings. This chart looks a lot less drastic than the active sales chart that we looked at a minute ago, right? We're at 199 listings, which is down, right? We're down 5% year over year, and we're down historically speaking too. But if we take a look, like 2018, there were 223 new listings in August. Now we're at 199. That is not that drastic compared to active inventory. One more time, we're going to go back to active inventory. In 2018, just use the same data, August of 2018, we were at 650 homes on the market compared to 162. That difference, we're talking multiple hundreds of percent difference between 650 and 162 compared to 220 and 199. So the point that I'm trying to make here is with the lock-in effect, if we were expecting to see the lock-in effect, we would expect to see new listings to be significantly down, right? Because that means people aren't listing their homes. They're not bringing new inventory to the market. But that's not what we're seeing here in Vermont. Yeah, new listings are down. They are down a little bit. But really what's down more than new listings is active inventory, which tells me that there's still way more demand than there is supply in the market, because these new listings are coming to the market and they're getting snatched up. So inventory can't sit like it usually does, like it does in a healthy market. And we're seeing that reflected in the data. And so while the lock-in effect may be playing a role in all this, what's really happening, I mean, new listings aren't down that much. We're seeing, relatively, they're down a little bit, but we're seeing relatively similar new listings coming to the market than we have in years past. What we're not seeing is inventory sit on the market. So, there's still more buyers than there are sellers. The market is still pretty competitive here in Vermont, but at the end of the day, you have to know what you're buying because it's not the same as it was in years past. Anyway, Liam O'Reilly, Vermont Economic Realtor. If you're looking to buy a home here in Vermont or somewhere else across the country, I'd be happy to help you out. Leave me a comment. Let me know what you think about this data. I love hearing your perspective. I learn from you folks. We all learn together as a community and help each other become smarter home buyers and home sellers. So please leave a comment. Other than that, I will see you in the next video.